Last time, we built Max's balance sheet. We know what his bakery owns. We know what it owes. We even know how much belongs to Max. So, why do companies prepare another statement? Isn't the balance sheet enough? Let's come back after a month. Something changed. We can see both sides has increased. But why? Did customers buy more bread? Did Max invest more money? Did the bank give another loan? We don't know. This immediately creates a problem. Because we don't know if he made a profit, loss, or break even. The balance sheet only tells us where we are now. It doesn't tell us what happened between yesterday and today. It's like reading the last page of a novel. You know the ending, but not the story. Now let's replay the month and see what happened. Customer walks in and buys bread. By the end of month, Max sold total inventory of worth $20,000. But for that $20,000 sale, he had to buy ingredients, pay for electricity, and pay salary. So, did Max actually make money today? Let's see. Max generated a revenue of $20,000. His total expense accounts for $14,000. Now, if we subtract revenue with expense, we get a profit of $6,000. This statement tells us the story the balance sheet couldn't. It tells us how much came in, how much went out, and how much remained. This is a simplified income statement, as we are only looking at first month of a new business. Now looking at both statements side by side, everything makes sense. The income statement explains why the balance sheet changed. So now we've solved two pieces of the puzzle. The balance sheet tells us, where does the business stand today? The income statement tells us, what happened during the journey that got us here? Together, they answer two important questions, but they're still missing one crucial piece. Imagine Max's bakery made a profit of $50,000 this month. Sounds great, right? But when Max opens his bank account, there's almost no cash left. How can a business make money and still have no money? Did the accountant make a mistake? Not at all. Maybe customers haven't paid yet. Maybe Max bought a new oven. Maybe he paid off a loan. Profit and cash are not the same thing. And that's exactly why businesses prepare a third financial statement. The cash flow statement. It tracks every dollar coming in and every dollar going out, so you can understand where the cash actually went. And that's what we'll uncover in the next video.